Okay, welcome out to the Commodity Report presented by TackleTrading.com. This is Coach T, Tim Justice here to present, the commodities market to you and kind of go through each one of the major ones that we've been watching. Let's first start with crude oil. Okay, crude oil, 17th of July here is when we're doing this report. I've been doing them, sometimes Thursdays, sometimes Fridays, just depending on the week and what else we got going on. We had a great event, the Cash Flow Club meeting on Thursday last night, and so those of you who are members that got to attend that event, it went awesome. So if you didn't get a chance, go watch the recording. Price of crude oil, 51.13. I'm still bearish on crude oil right now, short-term bias, the directional bias. Support at 50, that is a very key level. I think a lot of people are watching 50. Resistance, 56, and there's just general oversupply concerns. With the Iranian situation, and how we've also kind of, seen record supply numbers from the EIA. In fact, I read something when I read the report this Wednesday about how the EIA is tracked, record numbers here, and we are the highest amount of supply we've seen in 80 years for this time of year, which is incredible if you think about it. Also, Iran, their oil production could come online probably as early as 2016. I hear China will be a big buyer of Iranian oil. I'm sure the whole globe will. But it doesn't paint a good picture for oil right now. And if you consider the fact that the U.S. dollar also rallied this week, kind of a double whammy. What do we see in the chart? Well, we see oil prices dropping. They broke below support. I've got support here at 50. It could easily stay range bound in here for a while. If you're looking for a trigger, something below 50 on the WTI contract would be where you would trigger that in directionally. Resistance at 56, that's the old support, new resistance kind of zone. That's how technical analysis works. We're keeping a -1 call. Natural gas, range bound right now. Price is at 2883. 0, I'm giving a neutral bias, support at 2.6, resistance at 3. Let's go look at the NG contract. Nat gas has a really good ETF as well, the UNG contract, ETF I should say. You just kind of see this neutral range down here. We zoom in there, higher low but a lower high, lower high, higher low. Triangle, trying to break the high side of that triangle. I do like the stability in this right here. Resistance here, as well as up here at 3. I think the major resistance is 3. Pretty much range bound right now. That's why the neutral call. Gold, the metals market. A lot of gold bugs out there. I have to give it a -1 call. I'm not personally bearish on the fundamentals of gold, but like they say in markets, you have to trade what you see. We were neutral for a while, just while it was under pressure. I've given it a -1 call as it broke support. Guys, technical analysis is such that when you break support, you have to respect it. Now, do I think gold could easily come back up? Sure. It could be a fake down here, but the reality is we've broken major long-term support. And what is the real fundamental reason? Well, what they're going to tell you is that interest rate environments, when we're rising, and that's what the Federal Reserve is threatening to do, well, a lot of people who would invest in metals decide to go invest in interest-bearing products like bonds. And so there's this assumption that gold is going to, be bearish because of rising interest rates. Gold holders, or what I call gold bugs, what they would tell you is the reason they hold on to gold is in fact because of the Federal Reserve manipulation, and it doesn't have anything to do with bonds and bond markets. But that's what's going on right now. You do see a bearish candle. You do see a breakdown. Giving it a -1. I've got resistance at 1150. Hard to know where support is. You probably would do some kind of pay range analysis, like for example this breakdown back here. It's looking like from about 1190 to 1140, 50 points. A 50-point breakdown would put us in the 1090, 1100 range down here. From previous breakdowns, that looks about where a floor could be if that trend doesn't fake out. Now, it's just the one candle here on a Friday. But it is a significant pricing move. Silver, let's go into silver next, one of my favorite. I'm giving this one a neutral, 0, because I think value, relative value there is probably a little stronger. 1485 is the price. Got support at 14.6, resistance 16. Is it going to follow gold down? That's the big question I would ask anybody out there trading silver. We look at silver and we've seen these prices before. We saw a spike here to the downside, weird candle tail. We saw prices down here at 1460 a couple weeks ago. We've now been down red 5 bars in a row, coming into some support. Are we going to break down with gold and head closer down into the 13.5 range? We'll wait and see. I'm still giving it a neutral call until we see further price action. Copper 249, still bearish on copper, riding the 20 MA down is what I said here. Let's look here on the copper contract. HG copper futures bearish. You see these MAs, you see the blue line here, you know, bear retracement sell-off, bear retracement sell-off. Now we had a bear retracement. Actually, this is what they call a trigger candlestick right there, guys. You know, so definitely copper, we're leaving a -1 call on that. Bearish on copper. Palladium, this was a big one last week. We called it bearish. We've been calling it bearish for a couple weeks now. Since we went bearish on palladium, it has dropped over $100. Okay. Now, how do you trade it? Well, you can trade the futures contract, you can trade the ETF, or you can just watch it. But PALL would be the ETF. If you remember, just a quick reminder, under scouting reports, commodity reports, we do have a list of the ETFs versions of most of these commodities. And for a lot of traders who don't trade futures, they're going to want to use the ETF. So if you go into one of the reports, like we had one last on the 9th of July, see the futures contracts, but then you'll also see the ETFs. Now, if we're looking here on palladium, bear. It is just dropping like a rock. I do like, I've talked about this before, I do like the long-term prospects of using palladium because of some of what it can do, in technology and whatnot, and its industrial uses. But it's just bearish. I mean, you can't ignore the chart. This is why short-term traders start with technical analysis. You see the breakdown. You see the volume pickup. You see the lower high, the lower low, the lower high, the lower low. This is classic technical analysis. Some would even call it a crash. You're down 25% since the beginning of June. 25%. Okay, pretty or close to that percentage. It's bearish right now. The levels we're giving it, 600 support, but it's hard to even call it that. We haven't really held there yet. And then 660 resistance with increasing momentum. Platinum, giving this a -2 call. We've been bearish on this. Since we went bearish on platinum, it is down over $110. Okay, take action, people, in that sense. You've got to be the one determining your risk and your product and the way you trade and all that kind of thing, but use the information out there on the marketplace and the trends and the opportunities to go out there and trade. Platinum, let's take a look at PL. Again, lower, very, very bearish. The October contract, lower high, lower low, breakdown. This is about when we started getting bearish. Lower high, complete breakdown the last 2 weeks. Since our commodity report on the 28th, okay, I want to show you something here. 28th of June, we went -1. It was on a bear retracement, clear pattern. We called it. We hit it. It was at 1081. Even from that report, just 2 reports ago, 10/6/28, it just started breaking down. Real clear sell-off. So good technicals there, good increasing momentum. Probably not an entry point trigger today. You got to wait for that, but these should all be watch listers right now. Cattle, LE. Cattle prices might be nearing a short-term, near-term low, and we've got a triple bottom down here. You see support here, support here. Now, triple bottom spells one of two things. It's just a catalyst. It's either going to break down and sell off, or else it's going to find support and develop some kind of strength in here. I'm just watching this level very, very close. Because of that, I'm giving it a neutral call. 145 support, 152.50 is resistance. Lean hogs, 75.5. I'm going 0 to -1. It's got another double bottom forming these livestock prices. And you know what I'll do is I'll bring up the ETF version of livestock here in a minute and talk about it. ETF. Nope, not that one. Sometimes, guys, I'll tell you. Personal ETF, right there. Let's see. We're on cattle. Now I want to look at what were we doing? Hogs, HE, the HE contract. All right. And it's got a double bottom forming here. If you look at it, especially, this is one of those contracts where you got to put in the actual, contract for what we're looking at. Go to the trade tab. Make sure you look at it. The active contract is the Q5 contract. U5, there we are. Kind of adjust the chart. You'll see a double bottom kind of developing in here. You hit that one price, then the other candlestick hit here. We've got a triple top. I think it's moving into a range-bound pattern. Because of that, I'm giving it a 0 to -1. Why -1, not 0? Because it's been bearish over time. That's why. And every time we've hit our head here, it's bounced back down. I wouldn't be surprised to see it come back down and retest 72 at some point. Let's take a look at corn. ZC 717. Now all of these ag products here, you're going to see the same basic pattern, a bull flag, bull retracement type deal. I'm still bullish on corn. It's at 431. We're on a bullish retracement. We've got support at 420, resistance at 455. And let's find the ZC contract. Corn futures. Look at the breakout. Okay. Breakout, retracement, candles developing, moving average. Somewhere in here would be a good pullback zone. You know, pullback, pivot, trigger would be a really good signal for long, but we're not quite there yet. We're just on red candles coming back in this new direction of the trend. Next is oats, and then soybeans, then wheat. And why don't we look at all those because they're going to be very similar. 0 to 1 on oats is what I've got, 260 to 280. Soybeans, 0 to 1, waiting on a breakout on the upside. And then wheat, 1. I'm more bullish on wheat. So let's look at all three of those, you know, kind of back to back to back. Oats, soybeans, wheat. Start with the ZO contract. Yeah, you'll notice kind of a newly developing higher low, higher low, higher low, moving averages turned over on each other, pullback, channel. Yeah, you can see why it's somewhat bullish in here from a pattern standpoint. Soybeans looks very, very similar to that from technical analysis. We were at a bottom, we were in a downtrend, we broke out, we put in a new high and a new low, and we're on a pullback, but the long term still fairly neutral. That's why 0 to 1. Short term is this newly developing trend. MA is turning over. Long term is more neutral. Wheat, one of my favorite ones to keep track of, very tradable as well. What you'll notice is big breakout, pull back into the old moving average. I like this one more. I am a 1 on this one, but you got to get a trigger. Okay, we just haven't had a trigger candlestick quite yet, or even a couple in a row to confirm. 540, 550 range is what we called 550 support. Well, we tested that just today. So going into next week could be an interesting week for some of these agricultural products. And then the last one, sugar, 11.95. Somebody asked me to put coffee on here. We might do that sometime. Okay, 11.95. We're calling this a -1 and just still bearish. I mean, you look at that long-term downtrend, even bumped its head. Got a little mini support right there for a trigger if you're looking for something to trigger in. Okay, that's been the Commodity Report from TackleTrading.com. You can find our Commodity Report under the Scouting Reports and then come down here to Commodity Report. Videos are posted, and we always have a good discussion going on in the clubhouse. If you're interested in commodities, consider building your ETF watch list that track different commodities. There's a lot of other ones besides the ones I have listed here. You can go for combo ETFs, you know, like the DBA, the RJA, or LSTK, those ones that track more than one commodity, but rather track a basket of them. Sometimes those are more liquid and more tradable for ETF traders. Okay, guys, it's Coach T from TackleTrading.com. Get in the game.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.